With shifting market dynamics in Europe and a reawakening in China, it might be time to start looking outside of the U.S. for attractive investing opportunities. For more, we're bringing in Gareth McCartney, Global Co-Head of Equity Capital Markets at UBS. Gareth, it is good to see you. So let's start with Europe, Gareth. Clearly, a lot of investors have decided that's a place to be. They're committing capital. They're moving in. Do you share in that excitement, Gareth?
Sure. Look, there's been a long-running, compelling value case for European stocks, but in the face of the US exceptionalism, compounding very strong performance from US stocks, particularly in the growth segment, and you add in a strong dollar, there's really been a lack of a catalyst to trigger interest in Europe. I think in 2025, we've had two catalysts now. I think one is just portfolio repositioning as that US overweight got quite extreme. And then secondly, in the last few weeks, potentially a fiscal story emerging in Germany, which is driving, as really the catalyst to look at value. And you combine positioning and value. That's why we're starting to see Europe outperform this year.
Are there certain verticals in Europe, Gareth, where you see more opportunity than others?
I think the obvious places to look, there's been an ongoing, I think the defense theme will continue to play out. I think infrastructure more broadly. And then the other place that international investors generally look to engage in Europe is around the financials and particularly the banking sector.
So being a capital markets guy, I am curious what kind of activity we are seeing on that front, not just in Europe, but in the US and sort of globally, because we've talked a lot about the uncertainty here, sort of freezing things up to some extent, or at least stalling things to some extent. Is that something that we are seeing everywhere?
Look, I think naturally people look to the IPO market to get a benchmark for activity. What we have seen year to date, which is more encouraging, is pretty much a 20-year high in the volumes we're seeing going through the European blocks market. So we've seen a number of very large billion-dollar plus sell downs of secondary stock as investors look to effectively monetize some of those positions that they've had. So I think European blocks definitely one highlight year to date in terms of volume. The second angle on a global basis would be the emergence of China as well. I think that's been challenging over the last few years. We are beginning to see more activity in the beginning of this year. So there are some green shoots from an overall activity perspective, but there's no doubt that we're still not yet seeing a return to a fully functioning and healthy IPO market. There's a consensus that will happen in 2025 after we saw the IPO market reopen in 2024. But I think this recent volatility pickup that we've seen in the US particularly has likely slowed some of that activity. And I think the real focus now will be on the post-Easter window where companies are ready to come public, but we need to see if the market's going to be receptive to allow that to happen.
Gareth, we spoke to Klarna's CEO not too long ago on this show, and there's a European entrepreneur, obviously very successful guy, very successful founder. I thought his comments on Europe were really interesting, Gareth, and what he said was that, you in the US, he said, you all really celebrate success. You've got this kind of go-go mentality. He said, that's not true in Europe. In Europe, things are different. There is a kind of, in his words, anti-business sentiment in Europe, more pronounced than anything we have here in the US. As an investor, I thought those comments were really interesting. I'm wondering if you agree with them.
Look, I think there's no doubt, the investor base are very global in nature. And really, if they find good investment stories, it's almost irrelevant where those companies are. The capital will flow to those stories. There is no doubt that the US market has been very constructive, particularly for technology, fintech and growth stories. There's a deep capital stack that likes those opportunities, and there's precedent of a lot of companies floating in the US and performing very well. Our view is that the global outlook is more nuanced. I think you need to look at the objectives of companies when they come public. Doing an IPO is a very strategic long-term decision for any company, whether that's PE-backed or is entrepreneurial and founder backed. And so we really go back to first principles of looking what are the strategic objectives of the company, what are the characteristics of the company, and therefore when you bring those factors to the listing location decision, where is going to be the right home for that company with its specific equity story to really get a sustainable shareholder register that's going to really support that company at the IPO, but then critically in the aftermarket as well. And I think it's our view that Europe has a long history of being very attractive place for certain companies to list. They've IPO'd and then done very well in the aftermarket. Equally, the US has as well. So I think we're less specific that it has to be one or the other, and it comes back to a case-by-case decision based on the equity story.
One area that we haven't talked about regionally is China. So I'm curious to get your take there. Certainly we've seen already publicly listed equities really come back in pretty dramatic fashion this year. Are we also seeing a reopening of the capital markets there?
We are. I think we've seen some significant transactions year to date, so that's encouraging. And then secondly, this period of volatility that we're seeing is triggering global investors, I think, to look at asset allocation and look at some of their underweight regions where there is value on offer and potentially look to deploy more capital, either tactically to cover some of those underweight or more strategically to reinvest in some of those regions. And I think there's no doubt that China would be very attractive from a value perspective. We're seeing that tactical reallocation happen already in the secondary markets, and that's translating into more primary market activity.
Gareth, thank you so much for your time. We really appreciate it.
Pleasure.